Hey Shanky.
Hey Paul, how's it going?
Yeah, pretty good. Today was our first day with Going Elliptic, and we had a pretty cool recording and conversation with Barrett this morning around some of those trader tips for trading perpetuals. How did you feel it went?
Yeah, I think so too. I think good one for the first one. And of course, our viewers will tell us more whether it was helpful or not. But yeah, I thought it was a nice one, nice first one.
Cool. One of the things that I really appreciated, but we didn't have too much time to go into, was some of the charting techniques. So I thought, you're also pretty skilled with charting different assets. Why don't we record something where you can walk us through charting ETH and some of the popular DeFi assets?
Absolutely. Yeah, let's do that. So we can pick a bunch. We can pick about 4 or 5 for this session. And we quickly look at what the price action is like. Definitely ETH is one worth looking at. And then we can also look at a few DeFi tokens. And if this is something that viewers like, and we can also sort of spread more sort of educational information around charting and how to read the market, absolutely, we could do more. We could perhaps do it every week.
Great. Well, yeah, I think definitely falls into the kind of educational and fun side of what we want to do with Going Elliptic. So let's give this a shot. I'll
Excellent.
bring in your screen now.
Okay.
All right. So I'm not super familiar with TradingView. I've obviously seen it embedded in a lot of exchanges, and I know it's quite commonly used by traders, not just in the crypto world, but yeah, like let's jump in, and if you can talk us through it, that'd be great.
Yeah, absolutely. For sure, TradingView is an excellent piece of software, not just because of its rich charting ability, but also because it has all the data in one place. So it's easy to pull the data and then show it and read it and understand it. For today's session, let's quickly look at what the price action looks like on some of these tokens, and let's start with ETH. If you look at ETH market at large, there are some things, let's just set the context for. One, that of course, we are in a nice good bull run, right? So if you look at this chart, without even drawing anything, it's very evident that, if you start looking back in October, November timeframe, the chart has been heading straight up. It's just going a little bit of chops here and there. It comes back, some retracement, some pullbacks. But overall, the market has really gone very bullish, way up there. Now, in terms of charting, a good way to look at this is really just moving averages. If you start looking at moving averages, then I can pull one up. So let's just use the standard, let's say, exponential moving average, and I will plot a couple of those. This is a good way to sort of just start mapping it and see the direction of the market. Now, a 9-day moving average or a 9-period moving average is perhaps not the best one to pick because that will track the price very closely. What we should look at is really something like a 20, 50, 200 range market. So if you look at a 20-day moving average, a 20 period, because this one is a day level time frame, so of course it'll become 20 days. Then we get another one for 50. I think that'll give us a good sense of the immediate term, short term, and the sort of medium term trend. TradingView, like I said, is pretty cool. You can also color code them so it's easily visible. I'll just make this 20 a different color. And now you see that the 20 moving average has been, is plotted right up here. And then, of course, this is the 50-day moving average. Now, in the traditional markets, by the way, the 20-day moving average is incredibly popular because they're usually roughly about 20 days worth of trading every month. So it gives a nice view, sort of a monthly view or a rolling trailing monthly view. In crypto, of course, every day the markets are open, they're 24/7, but nonetheless, 20 period EMA has still become symbolic of looking at short-term trends. Now, if you look at this 20-day period, what you see is that most of these candles are above the 20-day moving average, thereby indicating very clearly that the market has been bullish. We saw late February that it retraced, it sort of pulled back a little bit where it had breached the 20 EMA and had come down almost to the 50 EMA, which is still bullish, but at least the extreme strong trend seemed to be breaking, and there was a little bit of a trend reversal here with this pullback. But beginning March, we see this healthy growth again. I think what we should do is we should just double click a little bit, get deeper in here, and start looking at what the price looked like up close. So today is the 8th, as you see, and we are somewhere in this 1720 price zone. And if you start going back to the 1st of March, we started it out somewhere near 1400. So there's a nice almost 300. This is all in dollar terms. This is tracking the ETH dollar value. So $300 worth of upward movement. Now, of course, for 8 days, it doesn't give you enough data to sort of really study how the market moved. But what we could do is we could go down to the 4-hour or the 1-hour, perhaps, and we'll see a little bit more of how the market moved, what happened to the market. So you'll get a few more candles because, we'll get one candle for each hour. And if you start looking at this is really March. This is the first week.
Yeah, one thing I noticed really when you switched from that daily view to 4-hour view and then down to the 1-hour view was just the number of green candles to red candles. Really, there was a lot more green at that time frame.
Absolutely. And, one, you could definitely just look at the candles and get a sense of that. But also, if you wanted to just get a sense of the movement of were people more bullish, was there more buying going on, or was there more selling, which essentially would sort of roughly map to the greens and reds. The other indicators one could look at would be the momentum indicators. So one could pick up, say, something like RSI, which is a popular momentum indicator, which could essentially show whether the market was overbought or oversold, and whether it was, net bullish or net bearish. So that's actually a good way to also read the market. Now, if you look at this 1-hour chart, which of course is showing you far more fine-grained than the daily one, which aggregates all the data, you see that there are so many of these points, which is above this waterline, if you may, the classic 70 waterline that RSI tracks, and it's showing that there were periods on the 1st of March, again back on towards the end of the day on 1st March, at the 23rd hour, and then again on the 3rd, and a couple of more times when it was really in the overbought territory. Now, usually in a normal market, when it's overbought, it's usually a time when it says, hey, the momentum has reached beyond the threshold, and you will see now, a little bit of selling there to balance it off, which we do see here. If you see, there is like a little retestment and selling. As it goes down, the momentum sort of goes in the reverse direction. But overall, if you look at the last 7 days, the momentum has been pretty positive. The other thing, Paul, that's worth looking at is just the price points, right? Like, where has it moved? So we could draw simple trend lines. One good thing to do here would be just to simply draw areas of resistance and areas of support. That might be the easiest one to draw. And let's do it at like intermediate 4-hour level. We'll get enough candles there, and we'll see how that pans out. So, this is really your first week March, which is this part of the world. Let me pull it here. So mostly here. And if you see here, the price, and I'm going to take out this RSI. We don't need this for now. The price has really moved. I'm going to take a horizontal one just to keep things simple. So let's take a horizontal line. We see that it came and tested this a few times. It has come up here in this zone, and it has tested this other line here. I would say roughly here, because this covers enough number of bars. And so now if you look at it, a lot of the price movement in the last week has been really within this range. Roughly the sort of 1460 to 1620 type of range, where the market went a little back and forth, and just was a little range bound and choppy. And then perhaps you could even take another line up here, because we did see these levels being reached. So you could also say at this point, if you also go back to February, right, because that's a continuation of the trend, this was in some sense forming an area of resistance, because the market didn't really break this for a while. This was back on 24th of Feb. and it's been trading below this line. But then we see that 7th of March, there's a nice big green candle, which sort of shows that it broke through this, and probably this is a good bullish signal from there on. So that's something that we see in the ETH price. So again, to try to kind of summarize, if you just look at the short-term price movement, I think it is not telling us anything more than what has already been observed. One, that it's continuation of the trend. There is still a very strong trend. We don't see any trend reversal really. There, of course, has been some minor pullbacks. And the other part is that with this healthy sort of breaking of this last resistance, perhaps you could expect this to become support, which in other words means that we might end up seeing it go up back to the highs that we saw in February, which was all the way up, sort of kissing the 2000 mark. I wouldn't be surprised if it goes up there, but of course, you can never predict the market. We'll all figure out where and how it goes. Yeah.
So what should we look out for in the week ahead for the Ethereum chart? Is it just staying above that resistance line?
So I think there are two ways to read this. One is, of course, if you're a trend trader, then the normal sort of confirmation here is that the trend hasn't been broken. So, if you have anything that is following the trend, well, stay put, stay strong, right? Like, depends on your strategy, but, you could still bet on that sort of upswing or the good, strong trend. The second thing worth looking at is just seeing how much the price is moving. What has been the amount of price movement? And one good indicator to look at would be the ATR, or the average true range. So if you look at the ATR, and this is the 14-day ATR, so it's just essentially telling you how much the market is moving on an average basis. And if you look at the time frame, it's a single day time frame. So what this is really saying is that on a given day, considering the 14-day period, ETH price is moving at least $150 on a given day, right? So that is actually a decent chunk for traders. If you enter in the right way and then you exit at the right points, you perhaps have an opportunity to catch a few swings, to catch a few of those sort of, one swing movements, because $150 would be enough for you to still make money. If, again, you have to be on the right side of the trade, besides the commission and other kinds of fees that you might end up paying. So I think that's definitely one thing also to note, that there has been a decent amount of movement. Even if you are a day trader, let's see how much has it moved on an hourly basis. This also seems interesting. There is almost $24 worth of movement on an hourly scale as well. So there is a good amount of movement in the price. The volatility and the movement is still pretty high. So that's also worth noting, apart from the overall continuing trend. So yeah, I would add that to it. Yeah. So yeah, ETH looks strong, Paul. I think that I don't see anything really changing drastically on the ETH front. Maybe we should look at some other DeFis and see how they are doing.
Yeah, why don't we look at Uniswap next with their Uni token?
Let's do that, yeah. In fact, I was looking at both Uni and the Sushi, which sort of, in some sense, are comparables. So let's look at Uni first. Now, Uni is a relatively young token. It doesn't have as deep a history as the ETH token, but or the ETH altcoin. But let's look at the daily range and see where it goes. So if you look at just the daily, the history that Uni came into existence fall of 2020, is also riding the bullish wave. But if you really look at this last 2 weeks, Uni has really broken certain price points. It is seeing a bunch of all-time highs, one after the other. And what is very interesting in Uni terms is there's something that I must mention here, because I just look at this chart and it pops at me. Is I'll start with the average true range, and I'll tell you what is incredibly interesting here. So you're seeing a movement of about $3.6 essentially on a daily level, right? But if you look at these two humongous candles, they're like two very big green candles, and of course supported by a few other green candles. This one really moved all the way up from You know, I mean, let's just assume, yeah. So this was probably the open at about $19 or something, and it closed at 28. So you know, if you just look at this, there's almost close to $10 of a green up on a single day, and this happened on 20th of February, and then we saw another one, which is very recently, perhaps yesterday on the 7th, where we saw the price move from 28 all the way up to 34. So that's another healthy $6 worth of jump. And you know, if you compare that with the average price movement of $3.6, both are very strong movements, right? And what that really tells me is that I think the buyers are really in control of the market, right? That's the kind of short summary here. And at least for now, over the last, 19th to 9th, so like last 20 days, they've certainly been driving the prices up and have taken it all the way up, from $19, $20 to where it is right now, which is almost $33. So that's interesting. That's interesting, worth noting in my opinion, and I think something that we should keep an eye out on. I think the worth noting part would be, can it be sustained, right? Will we keep seeing this, or this is like one-off, right?
Well, I guess also how much is it influenced by Ethereum's price, right? As Ethereum goes up, is that also kind of pulling UNI up as well?
That's actually a good point, because a lot of these Ethereum-based tokens do see a healthy upsurge, especially a lot of DeFi tokens, if the ETH price goes up. So there's a nice correlation among them, and it may definitely have something to do with it. Looking at the charts, it's tough to tell the story behind it in the sense that why it's happening. But what you can see is what has happened, right? And what do the charts say, sort of tell you looking ahead. So I think just from a standpoint of what the charts tell you, there definitely seems to be very strong sort of momentum up there. The other part I must mention before we move on to Sushi and others is we did see a little bit of profit taking perhaps, or pullbacks here. I would say these were probably profit takings, because there wasn't one like very strong big red candle, but there were a bunch of these red candles, which essentially, in sort of other words, was that the sellers were in control. More people wanted to kind of sell UNI than buy it, and that didn't last too long though. It went all the way from 21st to 28th. So that week, perhaps you saw a lot of selling, but then the trend reversed and is back up there. And because it was still keeping above the 20 EMA, so the trend was still strong. This just seems like one of those pullbacks or profit-taking events that happen, and then now people are back up there on UNI. So yeah, so in general, it seems it's bullish. But again, like I said, this is all informational. We're reading charts. We're not trying to predict prices or, tell anyone how to trade. We're just something to look at.
Nice. Should we jump into Sushi for a comparison there? Because obviously, as you mentioned, they've got quite a similar product offering there. So how's the chart looking different between the two?
Yeah, that's actually a great question, because fundamentally I think they cater to the same audience, and one would assume that they are absolute comparables, as I was saying earlier. They also came into existence almost the same time. I believe Sushi came first, and it accelerated the whole UNI story. I think Sushi is also riding the wave. There were, of course, some uncertainties around Sushi at some point in time in its history, but I think since the beginning of this year, it has really been growing strong. Now, what you see in Sushi, though, is I'm again looking at the chart at a very high level here and seeing the trend. Sushi seems to be going through a uptrend, but I think the pullbacks are a little more, I would say in some sense, a little more systematic or organized from a little market standpoint. I mean, you see these, these are like the higher lows, if you may. There's a low here, the low goes up, so it's kind of going up, but you also keep seeing these pullbacks. And if you look at the pullback, I'm going to just maybe draw a chart here. So let's look at a trend line. If you look at this pullback, for example, there's a pullback here, and then there is another one here. If you see this second pullback, right, and then you have another couple of pullbacks here. So if you look at this pullback, and we'll see one last one. If you look at this pullback, there is something to observe here. One, that Maybe I should color them differently. I think you can change the color. Let's make it all black. It's a different color. We can see it. Right. So hopefully this is visible. Okay. So if you start looking at the pullbacks, you see that they are roughly of the same length, which essentially is at least these three. You know, the last one seems to be a little bigger one than normal. But these three roughly are of the same length, which essentially means that it's following that, in substance, a healthy upswing pattern with small pullbacks from time to time, and higher lows means overall the trend is still sort of net upwards. Now, more than the trend here, though, the other thing that catches my eye is I could draw a trend line somewhat like this. I could say, hey, there's a let me remove these because otherwise the screens get crowded, the charts. So let's remove these. Yeah, and then now let's zoom in a little bit. Just look at the price action here. So that's closer in terms of our time frame. One could obviously draw, say, a trend line from here, roughly up like this. Okay, roughly up. Just joining as many candles as I can. Roughly, you could say, okay, this is a trend line. Now, usually the trend line is a trend area. It's never an exact one line. So, it's roughly this area, which is the area of value that this chart seems to be respecting. But I think more than this trend line, because this is nicely matching and testing the 20 EMA, I would say I think a better way to read this market is really just follow the 20 EMA. And if you look at sushi seems to really be respecting the 20 EMA, and you can even go back in time. And it seems like it has touched here once, touched twice, thrice, 4 times, almost got here 5 times. This one came to it 6 times, 7, 8, breached it a little bit. This was like one of those, sort of fake breakouts, if you may. Went back up here, 8th time, 9th time, 10th, 11th, and 12th. So I think this is a very strong tracking 20 EMA. So for traders who trade on trends, I would say follow the 20 EMA. The price seems to be, at least, again, purely from a standpoint of what the chart is saying, it seems like it's respecting the 20 EMA. So that's something just to keep in mind here.
Yeah, and is that one thing that you're looking for from a chart, is which indicator is kind of proving the most reliable for that asset?
That's actually a good point. And there are so many indicators that it's easy to get lost in the sort of jargons in the indicators themselves. My rule of thumb usually is to keep them to a small number, primarily because anything which is a smaller number is more grokkable, more understandable, right? Something that you can do with. So if you stick to 2 or 3 indicators, I think that usually is better than trying to go with a dozen of them. Definitely in this particular case, I see the EMA line, in this case the 20 EMA, which it's respecting, seems to be pretty reliable. So unless it's invalidated, right, unless there is something that the price changes over the next few weeks and you see it behaving substantially differently, I think this is an indicator definitely look at in the context of sushi. Let's also look at one more small thing, and then we'll go on to SNX there, I think, which is the next one on our list. The other thing I want to just look at this is, let's look at the momentum index, right? So just let's look at RSI, relative strength, right? And we do see here also, so right now it's not really overbought. It's in a good comfortable zone, but there were periods in February where definitely I think it looked like sushi was overbought. And whenever a market is overbought, I mean, it's not confirmatory, but it's just an indication saying that the market is probably overheated and it's likely to see some pullbacks and likely to see some selling. And in fact, if you look at these data points, some of these correspond well, not all of them, but this pullback kind of corresponds to the point when it was overbought here, right? This particular pullback also corresponds after this overbought period. This third one also sort of maps nicely with this overbought period, but then the couple of others don't necessarily map with this indicator. So every indicator doesn't really work all the time. and it's also something to keep in mind. It's not guaranteed. It's not prediction. It's just a tool that's telling you what's going on, right? And mostly
Sure.
it's mostly telling you a historical story and then saying, well, you make your judgment basis the historical story. Okay, let's quickly look at SNX. What say, Paul?
Cool.
Should we jump to that?
Yeah, I mean, this one has also had quite a lot of action recently, including that quite big reversal there. So, yeah, tell me what you're seeing.
Yeah, so SNX is another interesting one, and I'm just looking at the chart. Just discounting everything else, just the chart. I see a couple of things here in the chart. One is that it was definitely, again, like most tokens that we've seen, right, was on a strong trend, a very strong path, and in fact, I think it reached its all-time high of 28 or something close to it, somewhere around mid-February, right? So we definitely saw the price being very bullish, extremely bullish through February, actually through January and February, just kind of reaching that by mid-February. And then if you look at it, there's actually a sharp sort of reversal of trend. And we also see that the highs are like lower highs, right? And you also see a bunch of reds, right? So it did seem like this token or this coin was losing momentum and losing speed, right? With all these reds coming down. We also see a period, this is the period which is end of Feb, when it had breached the 20 EMA and come down to 50 EMA. Now, again, the 50 EMA is not super relevant here because we don't have really data that goes far back in history. But generally, when this happens, it's also an indication that perhaps the strength of the trend is weakening. It does not mean that it has become bearish or the trend is lost, but certainly these kinds of movements tell you a story. And the story here is that it's not as strong as it was, right? And it's becoming a little weaker. So that we definitely saw. But then, you come back to March, around 3rd of March, 2nd, 3rd of March, we see these, again, green candles up here, and it's back up to that 20 EMA. So it seems like it's retraced. Perhaps in some sense, you could draw a line here. I would assume so. Let's see if that holds somewhere here. Again, this could be maybe these. There are a few wicks here, so let's sketch this. And if you look at this, this in some sense was the resistance at some point in time. It's not exactly this, but roughly this area, if you may. Right? Saw it touching it, and then it kind of retraced and came back up and went back a little bit, and then it breached this, and then we saw this good swing up. Now there is a swing down here, but it seems like now this has become support. So this resistance has probably turned into support, and I think that probably would be held unless the market changes drastically and the larger crypto market and the macro market changes. I have a feeling that it might be safe enough to assume this $17.50 point as a sort of support for now, and we'll see whether it gets tested over the next few days, or does SNX keep going up on its journey and reaches newer highs and exceeds its earlier all-time high. So that's something to look at. But this is in fact one of those where I don't see a very clear picture. I would wait the next few days just to let it unfold and see what this week brings for SNX.
Okay, well, this will be an interesting one to look at in a week's time and look back on it.
Oh, absolutely, yeah. In fact, when we come back, perhaps next weekend or next Monday, we should look back and see what happened to SNX. Right? Like, did it really come back and test its support? Did it go further up? And something that we could go back and study again. Maybe even drill down to the lower time frames and see how it played out there or through the week. So yeah, definitely worth sort of picking that up again next week. Let's look at the last couple of them. So we see AAVE next. Now AAVE, of course, has seen a lot of positive price movement over the last couple of months. In fact, I think AAVE probably saw some big moves up here. Actually, the chart is saying so as well. So if you see beginning February, so January most of these tokens started seeing a strong trend, and then earlier part of February you saw again strong greens in favor of Aave, and Aave really went all the way up to 582, so 581 or 582, so that was really its all-time high.
Yeah.
Which is very a big jump from where it was perhaps even beginning of February. So if you look at beginning of Feb, it was in that 300 range, right? Roughly about 301, 302 price range. And by 11th of February, it had reached 580. So in that 11-day period, the price had really moved. It had almost doubled, right? Because it was close to 300, and now it's close to almost 600 with 580. So this is an unbelievably strong momentum where something doubles within 10 days or less than 10 days. Now, in the world of crypto, of course, sometimes this is not surprising because we've seen even with the majors or the big altcoins, such things happen. But certainly, I think among the DeFi tokens, Aave was showing the most amount of positive movement. Aave, of course, has seen some pullbacks since then. And in fact, you see some zones here towards the end of February where the price reached all the way back to where it was beginning of Feb. So, if you draw a line here, this is an interesting sort of line to look at. This is where the story started, right? About 302. And we saw it testing that a few times, So this one's like sort of a fake break, but we did see it being tested a couple of times, right? So it does seem like it was feeling a lot of sell pressure, Aave, for sure. I mean, this big buyers momentum could not be sustained for a very long period of time, and we did see a lot of sell pressure coming in. But what we do see here is that 302 in this particular case, roughly say 300, 300 to 305, became like the floor for it. So it couldn't go further down, and it tried to breach and went all the way down, I think, to 279. There's a very long wick this day, very long wick, but it closed back up. So that seems interesting. So, for anyone who's watching Aave, I would say you can safely, at least for the period, think of roughly 300 as the ceiling, as the floor, not the ceiling, pardon me there, and hopefully an area of support, right? So that's something to consider. Now, of course, the markets are very volatile. Things move quite a bit in the world of crypto, so never say never what can happen, but I think it definitely seems like a logical way to study this. Let's look at the amount of action here. So I would just look at the movements, and I'm just using a few indicators. Maybe we can look at more indicators next time. I'll go back to the one that I've already discussed, just not trying to introduce newer ones. And so here, if you look at ATR, this just seemed like on a daily level, there's almost a $50 price movement, which is,
Wow.
good, healthy movement, right? So
yeah, you can get double-digit kind of percentages on that on a daily basis. That's it's very good.
exactly, right. Now, if we look at the more recent one, we can also change this instead of 14. Let's just look at maybe last 7 days, right, and see what that looks like. And I think the story here in the last 7 days, it's 44. So it's still sort of fine, I mean, it has dropped a little bit, and that's sort of evident from the chart as well, right? We saw big moves up here, and then the candles have become the body smaller and smaller, right? So certainly it has dropped from 50 to about $44 worth of movement on a daily basis, but that's still a substantial chunk. It's still big, as you mentioned, right? There's still a lot to be seen there and a lot to be traded. The other piece we could see, the last one, then I'll jump onto BNB, is let's look at the hourly charts here and see how much action is there on an hourly basis. If you look at, let's just look at the last couple of days on the hourly. In fact, let's draw this line from here to here. It seems like it's very range bound on an hourly. Now, one thing that I do want to mention is one has to be careful when moving from one timeline to the other. If you're trading in the hourly time zone, these charts will make sense. But if you're trading at the daily time zone, usually these could be wrong indicators in some sense, right? Because the trend that is at a daily level is substantially different from what's happening at an hourly level. So just something to bear in mind. If you look at this hourly, though, I'm going to take this out. Actually, the hourly movement has been about $10, right? About So 7 days about $9.54. So even in the 7-day period, you do see that the price has been moving, in a good, nice range. There's almost $10 worth of price movement every hour. And the other nice thing is when this is range bound, this provides some interesting opportunities for swing trading. So you could buy here, exit here, or you could short here and buy back here. Again, you could go up, long sell here, go back down and take profit here. Now, of course, you won't really sort of squeeze every penny. You're not going to take exactly at these points. But if you give it some breathing room, you still have a good chunk here from, this is almost a $20 zone, right? $20-$30 zone, in fact, from 390.86 to 420. So even if you don't squeeze every penny there, you're still looking at a good, nice $25 zone to make money. And you could, if you're a good, smart swing trader and you're watching this carefully and understanding this and, believing in this range, on an hourly, you could get nice swings of 25 up, 25 down, 25 up, 25 down, right? So you made $100 here, assuming, of course, you won every time, which may not be the case. But nonetheless, theoretically, it's possible. Okay, now let's look at the last one. Yeah. What do you think?
This is really interesting because, I mean, when we think back of BNB, it started off as just like Binance's exchange token, right? It was representing some of their revenues. And they've obviously tried to reposition that with like Binance Chain and now Binance Smart Chain, trying to make it more of a network token like an ETH. So yeah, that narrative there, I think, is being kind of reflected in the charts in February with that just massive spike there in the green candles over just a few days.
Absolutely, yeah. I think the BNB that we saw earlier in the year and the BNB now seem like two different tokens, for sure. Yeah. So for sure, yeah, I cannot deny that. And, it's very evident from this chart. If you look at this chart, in fact, it's very interesting. If you just go back in time, because BNB has been around for a little bit, right? And this one is not showing as much data. In fact, this one is charting BNB perp, okay, which is fine, which tracks the spot pretty closely, and it's on Binance itself. But if you look through this, for most of 2020, the price was really around that $25 range, right? And did not see much price action. In fact, if you look at it, this is all the way from September to, I would say, December, almost December here, right? So that's most of the last quarter of 2020. You saw the price being more or less around $25, right? There wasn't much action in this token, and then it started seeing a little bit of upswing. And my guess here is it was just going with the market. The whole market was bullish. The whole market was uptrending, and BNB got some of it. So definitely it saw some healthy upswing. But the big change, as you rightly mentioned, Paul, really happened, I think, when their positioning changed. Now again, that's beyond this chart. That's something we happen to be aware of, but really from a chart as well, if you look at it, you do see that things start changing around 9th of Feb, right? And Feb was really an action-packed month for BNB, right? And so it goes all the way from $25, reaches the $70, $80 range, sees a bunch of green candles, and then there's a point when it goes all the way up to $383, right? So this is a massive change from 8th February to 19th. So that's 11 days, and 11 days the price goes all the way from, where was it? 8th of Feb, I said, so somewhere here, right? Yeah, so here was roughly about $66 to $380. So that's a humongous jump. That's 6 times, right? Unbelievable in 10 days. And I think I was saying about UNI, I'm just going to click through for a minute, that this was a big jump. This seems insignificant compared to the 6x jump. Right? That's just unbelievably huge jump. Now we do notice, just purely again from the chart, that it wasn't sustained. After we saw this long wick touching and almost kissing this 382, 383 range, it started retracing. It started sort of pulling back very sharply, and we also see some big red candles here. What we do see now, though, in the case of BNB, and I'm going to zoom in a little bit here, is that at this point in time, once you start following it beyond this correction zone, towards the end of Feb, it does seem to be respecting the 20 EMA, right? So just like we saw with sushi, that seems to be hugging the 20 EMA, BNB seems to be following the 20 EMA too, which is something to watch for, something that we should also look at next week and see whether BNB is respecting it. But this is an interesting, sort of observation here that it has really been respecting this. The other piece worth looking at is, let's just look at the market movement. So in the interest of being consistent, I'm going to again use the same indicator we've used earlier today, which is ATR, average true range, just showing how much the market is moving. And here it shows that the market for BNB is moving about $30 on a daily level, right, on a daily interval, which seems, of course, a lot more palatable than this humongous move of how much was this? This is all the way from 194 to 387. So that's more than $250 worth of a candle, right, in a single day.
Yep.
So certainly it seems like maybe it's stabilizing. And when I say stabilizing, I don't mean that the price is going to stabilize in this range, but certainly the movement, the volatility is going to stabilize. And that's also evident, from the chart. If you just eyeball the chart without looking at these numbers, these candles are all very big and they're becoming smaller. And then if you start looking at it from 25th to now, most of the candles more or less look the same size, right? And that's an indication saying, oh, okay, you know what? There's only so much movement on a daily level. So that's a good thing. That's a little more predictability for long-term trend traders. They would like to see movements which, again, are respecting a certain trend, in this case 20 EMA, and not humongous movements, because they're trying to catch like a big trend, right? So if you entered, let's say, somewhere here, you can just stay put in your position and then perhaps exit wherever the price goes, right? Which we don't know, right? Nobody can predict the future, but hopefully the upswing continues. But for range-bound swing traders, this is not fun anymore, because when it's moving only $30, and when you add in commissions and the fact that you may not be able to time it precisely, you're looking at much smaller chunks to trade. The opportunity becomes reduced. Just something to keep in mind, something to kind of think about as you look at this market.
Yeah, that's really helpful, and I'm already starting to look forward to looking at some of these and perhaps other assets next week. So yeah, thank you, Shanky, for kind of running us through those kind of top assets for this week and teaching us some more about the indicators. I think that, at least for me, that's been super helpful, and hopefully if you are listening or watching this and you like it, give us some feedback, thumbs up, subscribe, and we'll keep producing more. And yeah, follow your feedback.
Absolutely, yeah. And as Paul said, just chiming in, that we'll bring more of this. So let us know. We want to produce something that the listeners want. So yeah, like and subscribe and give us feedback, ask questions. Also, maybe even tell us which tokens you would want us to cover. If it's possible and the data is available, we can pick up some of those perhaps in a future session.
Excellent. All right. Thanks, Shanky. Talk to you guys again soon.
Thank you, Paul. Bye for now.